Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the third day of our Precious Metals and Critical Minerals Conference. The next presentation is from Lion Copper Gold. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I'm very pleased to welcome John Banning. He's the Chief Executive Officer of Lion Copper Gold, which trades on the OTCQB venture market under the symbol LCGMF and on the CSE under the symbol LEO. Welcome back, John.
Thank you, John. Appreciate it. Just want to welcome everyone. Really appreciate your attendance and taking the time to do so. Again, my name's John Banning, the CEO of Lion Copper Gold. We've got a new corporate deck that we pushed out this week, and I'm really looking forward to taking everyone through that and providing some of my personal comments around where we're up to. So just our forward-looking statements. Please take the opportunity to read through the forward-looking statements. You can find that on our Lion Copper Gold website. So where's Lion Copper Gold up to? We've been very busy the last few months. We're transitioning very rapidly into a copper developer with our partner Newton. We've got a clear path towards domestic cathode copper production. We're an advanced stage copper developer with our flagship at Yerington, the Yerington Copper Project in Nevada. We are partnered up with Newton, and we have just commenced our DFS and permitting execution plan. We're running those in parallel. It's quite important. I'll speak about that a little bit later. Our focus is on capital discipline and risk reduction. Lion has maintained a very disciplined approach to developing this project, managing investment monies and timelines, delivering things on time, all while reducing the risk as you do through the various stages of feasibility and development. Our market cap currently sits at about $80 million, and our earning structure with Newton is such that Lion retains about 35% of the project interest. So what we're doing here in Nevada, we're advancing a long life copper asset through the DFS and permitting in parallel with our partner Newton. They are funding that entire process over the next 18 months, which obviously gives a pretty good position for minimizing shareholder dilution and execution risk. We're operating this project, or rather progressing this project in a tier 1 jurisdiction here in Western Nevada. Within about 7-8 miles radius of our project, there's over 30 billion pounds of copper in resource. There's a very clear permitting path in Nevada. Nevada is an extremely friendly jurisdiction and a mining friendly state. To date, Newton's invested through structured partner funding about $28 million to bring the project up to where it's at now. And just last month, they made the investment decision to proceed through again to DFS and permitting, and provided about $30.5 million in funding for that venture. And importantly, especially in Nevada, Lion has about over 6,000 acre feet of owned water rights, which is sufficient for the project needs. As a side note, those owned water rights have a value of probably $30 to $40 million on the market by themselves. Quick overview of the Yerington Copper project. Would refer everyone to the pre-feasibility study technical report that was published in September last year for a lot of detail. Basically, this is a large porphyry copper system. We're sitting at an advanced technical stage. Base case at $4.30 copper is just under 700 million after-tax NPV. Where we're at now, we've completed the PFS and our DFS and permitting is underway in parallel. What I want to stress here and what's important is that our product is USA LME grade A copper cathode. This is a final product for US markets, 99.99% pure copper. This is not a project that produces or utilizes concentrator technology and tailing storage facilities, and then sends that concentrate overseas to get refined into copper. This is a final copper cathode project. One other interesting note to mention on this is our capital intensity on the project is just over $12,000 a ton copper, and our NPV to initial capital ratio is about 1 to 1. So with our funding partner, with Newton, we view that as an asymmetric risk exposure. So Lion retains project operator status. We're driving the DFS and the permitting forward, supported by Newton, who has extremely deep experience and knowledge around technical operational project areas. We retain 35% project ownership through this period. And again, they're funding the whole process. And this limits Lion shareholders and potential investors, for any further fundraising. We're not going to be fundraising to support ourselves through the DFS and the permitting process. Typical for development stage projects, Lion's market cap reflects a discount to risk-adjusted net asset value. This is normal. However, management believes in our case that we're undervalued in general. One thing I want to point out, on the right-hand side of your screen, you'll see a picture of the MacArthur pit, which is a part of the project. This is a brownfields project. This is a redevelopment of 2 existing open pits that were mined in the 60s, 70s, and MacArthur pit here in the 90s. This is a walk-up and dig project. So this is extremely advantageous. We have a very low strip ratio across this project at about 0.3 to 1. So again, we get to go through the DFS and permitting, which are typically the value creation bottlenecks for developing mining companies and their mining projects. We get to do that with a fully funded position, minimizing dilution risk to shareholders and potential investors. Our partner capital reduces technical risk, permitting uncertainty, and schedule execution risk. Again, that's kind of twofold. One is the funding is there. The detailed budgeting is completed for our DFS and for permitting over the next 18 months, that pathway, as well as the significant experience that Newton, our partner on this project, brings to the table. So why is this important? Why is Newton an important partner for us? They're a wholly owned Rio Tinto subsidiary. I think it's important to understand that their investment of $28 million to date follows a very clear path. So resource definition, environmental permitting assessment, technical work, studies, and a significant amount of metallurgical test work. And a PFS completion. So they ran a solid, as you would expect, due diligence process post the PFS completion to inform their decision to take this project to the next step with Lion, and they have. So that's how we achieved the earn-in and the $30.5 million of funding to take us through the next phase of this project development. Obviously, they had independent and expert validation of the asset's potential. That's reflected in their decision. We feel that this differentiates Lion CG, Lion Copper Gold, from other standalone juniors. It really reduces the risk profile as we progress through this phase of the project. And there's significant benefits that the Nuton technology brings on the environmental and social front, which I'll talk through a little bit later. One of the biggest questions that I get is how do we value Lion Copper and Gold? So we're going to spend some time on that. Everyone may or may not know that development stage mining companies trade at a discount to the PFS net asset value. That reflects risks. It reflects permitting and timeline risk, technical risk, financing, execution uncertainty, jurisdiction, and the commodity price cyclicality. So I want to walk through several slides on what management's view of that situation is for Lion Copper Gold. So the focus here on looking at re-rating is going to be milestone driven. So that's moving through the DFS in parallel with permitting, getting up on the Fast 41, which we are working on and working towards, and our continued involvement with our partner who's working very closely on this project with us. We have a very integrated systems and processes and rhythms and routines to ensure that our partner is available and moving through the project with us to support in terms of technology expertise and obviously the funding. This is all leading to a final investment decision about mid next year. So the risk management framework, permitting is very straightforward in Nevada, clear, established, well understood. We're looking at getting up on Fast 41. In terms of copper price cycles, we'll continue to optimize the project through the process of executing the definitive feasibility study. And I think everyone's pretty aware of the favorable copper hemisphere. So we've got great structural and fundamental and political tailwinds on the copper pricing front for the foreseeable future. Development execution, we have an excellent track record of managing the monies here at Lion and delivering the outcomes as we've taken the project through the various stages of development. And again, this next stage is fully funded by the partner. I'm going to take some time here about the earn-in agreement with Nuton. I think it's really important to understand. So after the DFS is completed, which is in about Q1 of 2027, and we will have advanced the permitting a fair way down the track. So 18 months of permitting effort. Nuton and ultimately Rio Tinto will make a final investment decision. And at that point, they will look to form a joint venture with Lion and crystallize the 35% interest that Lion will retain and their 65% interest. They can also choose to exit. and Newton can exit with a 1.5% net smelter royalty on the project, and then Lion would retain 100% of the project. At that point, Lion can also choose to not form the joint venture with Newton, and then Newton would then acquire Lion's 35% interest in the project at fair market value. So there's a fair few options in there for Lion that are at Lion's discretion. So this is kind of a summary of where we're up to. We've got a great copper asset strategically located in the heart of a 30 to 40 billion pound resource tier 1 district. We're progressing our partnership with Newton by advancing a DFS and permitting as quickly but as effectively and in a disciplined manner as we can. We do not want to create rework or create situations where we have to go back and do things over. That costs time and money, obviously. That's not how we roll. Our strategy, again, is to reduce uncertainty through the process, maintain disciplined execution as we have over the last several years, and we believe that that will allow valuation to reflect over time with our progress. I want to spend some time on value and Lion. So this is following on with setting the scene from previous. So our project NPV, at our base case at $4.30 copper, is just under 700 million post-tax. If you go back to our technical report and the economic sensitivities, the project is at about after-tax project NPV of 1.3 billion at 525 copper. I think most copper bugs are aware that COMEX and LME is sitting around plus or minus $5.80 to $6. Our interest, Lion CG's interest in this project is 35%. So then that gives you an implied gross attributable NPV value range, given the sensitivity at 525 I mentioned, of about 240 million to 459 million dollars. This is before any P to NAV risk adjustment. Our current market cap is sitting around 80 million. Again, this reflects where development stage projects are. It reflects permitting and execution risk, timeline uncertainty, copper price, technical issues. And if you go back through our information, you'll see that most of those risks have been already significantly reduced. We expect value to evolve over time. As we move through the DFS, we advance our permits and those execution risk positions compress. So this is kind of an illustrative example of like the P to NAV multiples in the Lion Copper and Gold case with our 35% applied to the project interest. So if you think that we're around the PFS level, advancing into DFS and permitting underway, we think that we were sort of sitting at that 30% P to NAV multiple, and in that range of PFS sensitivity and our base case, we're on the low end of that at a market capitalization of 80 million. If you go back to our broad sensitivities from the PFS, you see our base case again here, just under 700 million post-tax NPV. Right now, at current COMEX, that's kicking up to sort of 1.6 to 1.8 billion. But let's just stay focused here on the base case. This is an important slide. There's a bit of information to consume on here. Basically, you've got the 6 copper cathode projects in the US that have indicated or are planning to go into production by the end of the decade, by about 2030. So this is million pounds per year. On the left-hand side, the axis, and you've got P to NAV ratio over here on the right. So you've got Cactus, and so these are kind of our peers, if you will. And in terms of indicative value, our P to NAV is sitting at around 0.3 at the moment. And a number of others are sitting in quite a bit higher than that. So there's a question about why. And I believe that this project, again, how do we value? I get this question a lot. How do we value Lion Copper Gold in this project? So again, we have essentially crystallized our 35% position in the project. There's a very robust technical study that supports the economics at 694 million, of which our portion is 240 million or thereabouts. And our market cap is 80. So you take the 80 million divided by the 240 and you get about 0.3. These other projects and their P to NAV ratios are quite a bit higher. And that's a reflection of risk or perceived risk in terms of the items that we discussed and outlined. And management's view is that those risks are significantly already reduced with our Yerington copper project. Again, dilution risk is mitigated, permitting path is clear, technical risk is very well understood, and our commercial structure with Newton is clear. So we believe there's an opportunity there. This is just a quick overview on the share price performance. Copper-focused peers over this period gained about 135%. Lion's come up greater than 150% in share price. So the point is we're accelerating. The trend is going the right direction. That's underpinned by our continued delivery on doing what we say we're going to do in terms of progressing study, getting our water rights back, and cementing our next step of investment with Newton for funding the DFS and the permitting. So where are we headed? On the left-hand side, there's just a number of things we've achieved over the last, say, 18 months. The focus now is for project DFS and permitting lead appointments. We have gone out for requests for proposals for a number of entities. We've received all the proposals back except one, and we expect to appoint lead on the DFS and lead on the permitting in the next 2 weeks, and we'll be announcing those appointments. Next, earnestly moving into engineering, design, and mining optimization studies, commencing state and federal permitting, getting up on the FAST 41, transparency, and then complete DFS, and then get to that key final investment decision. So there's a very clear permitting path in Tier 1 jurisdiction in Nevada. I don't want to go through all this, and I'm getting short on time. This is a brownfields redevelopment. Much of the site is existing disturbance, and we have no threatened or endangered species identified. Much of the site is characterized. That reduces getting your baseline data timeframes. The required permits identified and detailed, schedules developed. We have a very good understanding on that. We have our water rights. We have over 6,000 acre-feet for the project. There's a lot of advantages embedded in the project design from a water perspective through the use of Newton technology. there's a significantly lower water intensity than conventional concentrator and smelter routes. We will be able to utilize the pit lake water. There's over 40,000 acre feet in the Yerington pit that we will be able to utilize for a beneficial use for the community. We get to redevelop on a previous disturbed brownfield site, which will ultimately result in better outcomes for remediation. Energy, our acid plant facilities will have cogeneration and heat recovery for the project, so that will be ultimately a very low impact on the regional power infrastructure. And Lion Copper and Gold has a long and deep history in this community, been here for about 20 years. So we have very strong relationships with local stakeholders as well as Nevada agency and government officials. I think everyone's pretty aware this is straight out of the S&P Global Energy and Marketing Intelligence report from last month, projecting a pretty big deficit. Interesting for us is that Yerington Copper Project is targeting a 2030 production kickoff. And I think what's also interesting to note is that if all the 6 projects, the copper cathode projects that I mentioned earlier, were at full capacity by 2030, this will only address 35% of the refined US copper metal deficit. So this is basically a summary of what we've achieved with Newton and our momentum going forward. In the blue, those are all the key milestones that have been achieved. In the orange, we've received the funding in January of $30.5 million. As I mentioned, we'll appoint the lead consultants for DFS and permitting. We'll get up on the Fast 41 by Q2. We look to complete the DFS in Q1 early next year with an FID, final investment decision, by mid-27. We anticipate a fully permitted project in the first half of 2028. And then you've got construction long lead items, and then looking to commence cathode production in the first half of 2030. A summary of our capital structure. I'll let everyone go have a look at this, but basically we've got 34 million cash on hand at the moment, again, to fund us through this intense next period of work. And everyone can go have a look on our website around the board and management team, but it's a fantastic team with great to work with and delivering exactly what we need to be doing. So I want to thank everyone. I've got not much time for questions, but I'll try to grab a couple here. Can the DFS be accelerated? That's a great question. We currently have it at 12 months. We expect practical completion actually by the end of the year. And it takes a month or two to actually complete the technical report. So we don't think that can be accelerated at the moment. That's our plan, and that's what we're comfortable to be able to deliver on. Just reading through. Look, there's a couple questions on the Bear deposit. The Bear deposit is directly adjacent to the Yerington project. It's a historical resource that doesn't meet NI 43-101 code of about 6 billion pounds. We are evaluating that resource for potential development, and that's a stay tuned. And we'll see how we go with the Bear deposit. But it's looking favorable, and we're pretty excited about it. But our project is our focus. Yerington Copper Project, and moving that as quickly as possible is our focus. The top risks you consider material today, and how have they changed since publishing your 2025 PFS? Our risk was funding. and having enough funding to have the full pedal to the metal and go as quickly as possible on permitting and DFS. That risk is removed. All the other risks to me are reasonably immaterial. We just need to do the work. I want to thank everyone for their time. You can reach out and schedule a meeting with me for the 17th through OTC, or please feel free to contact the office directly. I'm always happy to take calls and chat about this project. Really appreciate your time and questions, and I wish everyone a great day. Thank you.